Hi, I'm Brien Lundin of Gold Newsletter, and I am here at the Metals Investor Forum, Vancouver edition. It's a great market. It's a great crowd, lots of excitement, lots of opportunities. One of the better opportunities right now is a company that's in our portfolio in Gold Newsletter, has performed very well over the last year, but is just about to break into a whole new realm of potential, realized potential. That company is 1911 Gold, and I have the pleasure of talking to Shaun Heinrichs, who is the CEO of 1911. Shaun, your project has so many, we were just saying off camera, so many selling points. I don't know where to start, but you have in your lap, you have $400 million replacement value of infrastructure in a historic mine that is barreling toward production with a very large resource that is growing rapidly in the midst of a very large land position that's packed with historically producing mines and high-grade resources. Other than that, what you got going on?
Yeah, where do I start?
Yeah,
no, it's an amazing setup, Brian. I just want to thank you again for bringing me back on the show, or to the show here today, and for supporting us over this last year and a half. It's been great to have you.
It's worked out very well.
Yeah, I'm sure it has.
But I'm excited about the future. In your presentation today, I was just telling you, time flies. I did not realize how close to production you actually were. So tell us, let's set the background a bit about the True North mine and your ownership of it and rehabilitation and the like.
Definitely, yes. So just a bit of background quickly. It's the mine is located in Manitoba, province of in Canada. Not a province well known for gold, but this is a historic producer, over 2 million ounces produced. We have all the infrastructure currently in place there, a fully constructed mill, well over 400 kilometers of underground development, and the underground mines already there intact. And the development in the underground is right into the resource, the 1.1 million ounce gold resource we've got. So we're not looking at significant amounts of development to get access to the areas we need to be. And then again, on surface, we have all the camp, kitchen, and other facilities already there waiting for us to start using. And a lot of that is being used currently. So,
how much rehabilitation or addition or upgrading do you need to do?
So one of the things we are doing is we're going through the mill to make sure that everything in there is fit for purpose. That's a phrase that our new mill manager keeps coining, and I like it.
Yeah.
So we do expect to spend a bit of money fixing up water flows, fixing up systems in the mill to make sure it works properly and more efficiently, and is able to improve recoveries and throughput. We are putting a brand new crushing circuit on the mill, which is something we've been planning and talking about for quite a while. That's now actually happening. But then the rest of the surface infrastructure is more or less everything that we need. We are bringing one more camp building here in the near term, I should say. So people are growing. We started the year with about 10 people on site. We're now around 35. And on top of that 35, there's well over 75 contractors on any given day. And I'm not including the drillers.
Wow.
So it's very active right now. Things are moving very fast. And as you said, we're imminently within shooting distance of production.
Well, human resources are important. Obviously, gold resources, what everyone looks at. 1.1 million ounces current resource, but you have extensive drilling. You were able to get into the mine. You didn't have to hit a pleasant surprise. You had great access, didn't have to dewater as much as you thought. Are drilling from within the mine now, a lot of surface drilling, a lot of meterage that is not included in that resource. So let's hear about that.
Yeah, certainly. That we've been busy. I mean, since this time last year, we've drilled over 25,000 meters on surface. We've made 3 what I think are major discoveries. 2 of those, which people have heard a lot about, Sam West and Sam Southeast, lie within 300 meters off of existing underground workings. They sit in the same host rock, but they're associated with different geological shear structures. We've now recently identified a third one called the Shore structure. This is the same structure that fed one of the historic mines, the 007 mine, off of a completely different host rock unit. I don't want to get too geology intensive, but this is something that we know has mineralization. We've hit it 4 times, I think, now. And we're going to follow that up. We're drilling that one from underground now. So our 2 drill rigs now moved underground. We've done just over 8,000 meters, I think, underground. And this is continually growing and evolving because they're operating nonstop right now. We've been testing that Shore target underground, and we're about to start testing Sam Southeast a little bit again from that underground spot as well. And then,
so you're getting the best of both worlds. In this market, the market really loves now which it didn't before, but in this price environment, loves projects that are going toward production, near-term production, that can take advantage of this gold price environment. But the market has always loved the exploration story. So you've got a lot of, you're discovering new zones right next to infrastructure where it can be exploited. When is the next, or will you have another resource estimate?
We will. Yeah, our plan really from the start when we kind of went down this path was to show the size potential of the property itself, and just in the mine lease itself. Keep in mind we have that large land package, and we've successfully done that. We've grown the footprint around the existing shaft mine, the True North mine, with those 3 additional discoveries quite a bit. The hole spacing on a lot of those areas is actually close enough that we think we have a significant resource already for an update. But we are going to look to extend and expand those areas and grow them a little bit more. Overall, with the drilling we're doing underground, that surface drilling we've completed, and the follow-up exploration drilling we're doing underground as well, we expect to have a global resource update towards the end of 2026.
Okay, the end of this year.
Right. And that's really going to support also help support the PFS. We're hoping to do a preliminary feasibility early 2027 right now in support of a restart of the mine, which should follow shortly thereafter.
So we are talking sometime early next year?
We are
for production.
For the PFS, yeah, for production, exactly. Yeah, we're looking, we're trying to give ourselves a bit of range here, but it'll definitely be in the first half of 27, and I'll push as hard as I can to make it early 27.
So in rapid order, we're going to get a new resource, economics and production, bam, bam, bam.
Yep, larger resource, better economics. We're developing one of the satellite resources out on the belt as well. It's about 45 kilometers away. Has a historic, or not, a 43101 resource already on it of 300.
But really high grade, right?
High grade, 8 grams per ton.
Oh, wow.
We're drilling that out right now. We'll have an updated resource on that in the next few months as well. So.
And one of the aspects of your story that I don't think is appreciated enough is the size of your land position. And it is just peppered with historic production and historic projects, and in some cases, historic resources. You have to manage that. I mean, which way do you go? And the market likes exploration, but you've got this fantastic development story right in front of you. How are you balancing that?
It's challenging. I think we talk about it a lot, ordering priorities for drilling and exploration and where your drill dollars go. The focus is always for us right now going to be on things that can come into production sooner, focusing on that first 4 years of production. What can we bring in? How do we improve the grade? How do we improve the areas of access that we've got? So a lot of the drilling you'll see out of us this year is going to be more focused on resource extension, growing the 1.1 million ounce, trying to bring some of the new discoveries into the mine plan as well. We got Sam Southeast, which sits very close to the mine. We think we can drill that out and bring that into the mine plan. But beyond that, we do need to keep that pipeline going. And so we've got really, as you said, a number of different areas across the property where we've either drilled, we've got historic production already. So we know these are already, former mines. You always go looking next to the former mine to find a new one. So we've got those, but in that priority list, you've got Ogama Rockland, which I mentioned, which already has a resource. So in terms of regional priorities, that's first, because that one can be developed and brought into production a lot faster.
And great grades to show the market.
And great grades to show as well.
And so your production is upcoming. What level of production will we be talking about?
Yeah, 27 will be a ramp-up year. So we'll start off in the higher levels of the mine and some of the lower, and that tends to be associated more with the lower grade. So we expect production to be kind of in that, 30 to 40,000 ounce range in that first year, but it'll be kind of a lot of getting into the areas we think are going to be more lucrative down into the bottom part of the mine and what we call the 710, 711, and then eventually into the deep east, which is even further down in the mine. And then also extending some of the ramp mines that we've got close by, like 007. These are just different mines, 007, Hinge, Cohiba, and opening those areas up. So I expect, within the second and third year, we'll wrap up over 60,000 ounces of production. And then as we start to develop Sam West, Sam Southeast, and the shore target, and start to bring those in more horizontally towards the shaft, and we're able to optimize the use of the shaft itself to increase throughput, we should be able to increase the ounces even more.
Well, you are, as I said, barreling toward production in the best gold price environment we've ever seen in history, and the kinds of margins that have never been seen in history. It is, to me, a clear path to a much higher market valuation. And I think all of our shareholders and readers of Gold Newsletter are going to be very happy.
We'll keep working hard to make all of that happen, and it's all within reach at this point.
Great. Thank you, Shaun.
Thank you, Brien.